Yo, what's up traders? Welcome to a new video. In this video, I'll be showing you a nice trading strategy for beginners to scalp gold. When I started trading, this was one of my most used trading strategies because the strategy is so simple and easy. By the way, comment I subscribe so I get to know my subscribers. I'm really curious who my subscribers are. Alright, the first thing that you do is you go to trading view. As you can see, this is the symbol of gold. Then you go to the 1 minute time frame. Then you look for this indicator over here, the EMA 20, 50, 100 or 200 by Dr. Sweets. You click on that, or you can also look for the exponential moving average and you click twice on that, but I prefer just a simple EMA 20, 50, 100 and 200. Over here we see the indicator, then you can just play around with the colors. And this is the 20 over here, the first one. This is the 50, this is the 100, and this is the 200. I choose the red color for the 50 period exponential moving average, and I use the white grayish color for the 200. Alright, and this is the strategy. It's quite simple, and I think that every beginner is able to understand the strategy. First, the 50 exponential moving average needs to be above the 200, which means that we're only looking for buy opportunities. So in this case over here, we see that the 50 is above the 200, and we wait for the price to go below the 50, and as soon as it comes and it closes above the 50 level, we take a buy trade and we place our stop loss below the latest low. As you can see, this is the latest low, and we use a risk of 1.5 to 1, which is about here. So again, the price needs to go below the 50, and then when it crosses and closes above the 50 exponential moving average, while the 50 exponential moving average is above the 200 exponential moving average, we take a buy trade. Then another trade example over here. Oh yeah, another thing that I would like to add is we only take one trade until the trend changes. So now we're still in an uptrend because the 50 is still above the 200 exponential moving average, so we do not take any trades. This is another trade example over here. We see the 50 crosses the 200, so now we're only looking for sell opportunities. Okay, so the price crosses the 50. We also call this a pullback. And then when it closes below the 50, as you can see, this gray candle is also a sell candle, a bearish candle, and it closes below the 50, because now we're only looking for sell opportunities. So we take a sell trade, we place the stop loss above the latest high, which is about this candle over here, and then we take a 1.5 to 1 risk reward ratio trade. And as you can see, this one turned out to be a winner as well. I have much more examples for you guys. Over here we see the same trade, uptrend now. It comes below the 50 and then it crosses and closes above the 50, because now we're only looking for buy opportunities because the 50 is above the 200. So we take the trade, and as you can see, this turned out to be a winner as well. But that's not always the case. We cannot win every single trade. Over here we see an example that didn't turn out well. Now we're only looking to take sell trades, right? Over here the price went to the upside. We're still at the 50 is still below the 200, so we're still looking for sell opportunities. It closes below the 50 over here. We take the sell, and we got faked out, right? We place our stop loss above this level. I mean, if you place your stop loss a little bit higher than what I've placed it right now, then it turned out to be a winner. But it totally depends on where you place your stop loss. I use quite tight stop loss. As you can see, this turned out to be a loser. Over here, this one is a winner. So we see a crossover. The 50 is slightly above the 200. It comes down and then it comes back to the upside. It closes also over here. It closes also above the 50 level. We take the trade, stop loss below the latest low, which is about here, and then 1.5 to 1, and that's the winner. We only take one trade per trend direction, so we do not take any trades over here. We're looking for sell opportunities. We take a sell order, and as you can see, it didn't turn out to be a winner. This was a loser. And something that I noticed is that this trade you probably didn't take, because we are trading at the Asian session, and the Asian session is 9 times out of 10 not the best session to scalp, because there's not a lot of volatility. And as you can see, this one hits our stop loss. Over here we see the same. We're still trading in the Asian session right now. As you can see, also a loser. This was a loser as well. Our stop loss gets hit over here. It was the still Asian session. And then over this also turned out to be a loser. And then this one was, now we're in the London session, and as you can see, this was a nice winning trade. 1.5 risk reward ratio, 1.5 to 1, which is nice. Over here we see a winner as well. So the 50 crosses above the 200. We're only looking for buy opportunities. We see a sell trade. It went downwards. It closes below the 50, but then another candle crosses above the 50. We take the trade, and we place our stop loss below the latest low, which is about here. 1.5 to 1 risk reward ratio, and that is a winner in 2 minutes, basically. In 2 minutes. So that's 3 minutes. That's really fast. Then we look for another opportunity. So I have taken in total about 25, 26 trades, I'm not sure. But over here we see that this one is a loser, and again we're in the Asian session, so this might be a pattern. And so if you're thinking about using this strategy, then I recommend to not use this strategy during the Asian session. Over here, another loser. This one is a winner, which is it is still in the Asian session. But it's a winner this time. Over here it's a winner as well. 50 below the 200, pull back, crosses below the 50 exponential moving average. We take the trade, 1.5 to 1 risk reward ratio, and that's a winner. This one is a loser. Okay, so let me show you in total. Let me show you how many trades I took. So over here we have in total 14 profitable trades, which means that it has hit the TP level with a risk reward ratio of 1.5 to 1. And we have in total 11 trades that hit our stop loss, which means that we lost the trade. And that happens as well, which means that we have won more than that we have lost. And we also used a 1.5 to 1 risk reward ratio, which means that this trading strategy is profitable. So if you are thinking about using the strategy for the period that I've tested it right now, which is, let me take a look. So this is the 28th. When I go back, the first trade is placed on the 24th, which means 4 days. Of course, a short time period, but it shows that this trading strategy is profitable. If you're hyped and you would like to see more, then I can test this strategy 100 times. So make sure to check out the next video. If you like this video, give it a thumbs up, subscribe, and I see you in the next one.